recording. All right. So with the Forex basics, what I really want to go over, I'm not going to go over what is Forex. If you guys are on this call and you guys have been following me for a while, whether it's on our free channel or on our Instagram, or you guys are already a member, you guys should know a little bit more of what is Forex, what a pip is. I wanted to go into like the basics of technical analysis, analyzing the charts, analyzing these candlesticks to be able to predict and react to what's going to happen in the future on the markets. So the market's just open. It's a new week, but we always need to look into the past to be able to see what happens in the future. So what I have on my chart is some lines here that are basically acting as support and resistance levels. These are pre-drawn out based on even numbers. This is called quarters theory. This is a little bit more advanced. So if you guys are more advanced and you guys want to research on what these levels are, these key levels, I would look up what quarters theory is and kind of research on that, and you'll get a lot of information. There's a whole book written about it. But what support and resistance lines are they're basically just lines that you draw in the market where you see that price is constantly pivoting at or going to that level and kind of having a drastic reaction in the market. So we can see that at this level, let's see, where's a good level? This level right here where we have this line, let me change this to a different color than what we're always using so that you guys can see it better. All right, so at this line, we see that there's a lot of reaction in the market at multiple different points. We see right here that when the market came up to this level, we had a reaction where it pushed to the downside. Then it broke back up above it, and before we could continue going to the upside, it actually retested this level here. Then it doesn't touch this line again until a long time later. Let's see, from September of 2013, it doesn't touch this line again until February of 2016, but we have a major reaction at this level. It then shoots back up and then consolidates in this area until it skyrockets back down. But we can see here that on this candle, we shot back down and then shot up in the same week to come and react at this level. And then again, in February of 2018, we came back to this level and had a strong reaction and kind of changed this direction from being in an uptrend to a downtrend. So these are support and resistance levels. Resistance is when price is below that level and it comes up to touch it as a roof. So an example of resistance, we have an uptrend and it hits a major area and then bounces off of it. That's resistance. Support is when we come back to, like, say, a line here, and this is support. It acts as a floor for price to then shoot back up again. So there's constant levels of support and resistance in between the trend. You try to identify the most major levels depending on what time frame you're trading on. As you can see here, that this level right here is also a significant level here. On shorter time frames, you can see here we have a reaction at that level. Right here we have a reaction right here. So that's what we're looking for in the markets. Specific areas that every time price comes to that level, even right here, that we have some sort of reaction to that level. Now, what kind of reaction is going to happen, whether it's going to break through like it does here and retest that level, or whether it's going to hit that level and reverse, we don't know what's going to happen. We just react to what happens at those levels. That's the most important thing that you guys need to learn from this, is that I'm not a fortune teller. No trader is a fortune teller. But what we do is we identify important areas in the market and then react to what happens at those important levels. Another thing that is very important is looking at trend lines. So you can see here that here we had an uptrend. For those of you guys who are very new, there's only 3 different types of movements in the markets. We have uptrends, we have downtrends, and we have consolidation. Really, the only other type of move, this is like very basic, and then there's 3 cycles in the market. So this is the 3 different type of movements. It's either constantly making higher highs and higher lows, and that's an uptrend. This, you're only looking to buy. You have constantly making lower lows and lower highs, which is a downtrend. And then consolidation or accumulation, there's a bunch of different synonyms for it, is basically where price is constantly ranging in the same up and down level. So those are the 3 types of directions in the market. But then we have three different types of movements in the market, which is impulse movements, which is a big movement with the trend. So here we have an uptrend. So this is an impulse movement. Your next type of movement is a pullback. So a pullback is something like this. You see that the market moves significantly slower during this time. Each candle is 1 week. There's a lot more candles to go, only about half the distance that we moved in this short time to then go half the distance down in about double the time. So this is a pullback. And then the last type of movement is consolidation, which would be an example of here, where the market stops moving and just starts going in an up and down range. So we have impulse moves, we have pullbacks, impulse move, and let's say consolidation. From a consolidation, we're looking to either break the top to the upside to buy, or break to the downside to the low to sell. With impulse moves, we don't trade during an impulse move. So we don't trade in the middle of this impulse move. We trade at the end of a pullback. We enter once we have a confirmation that the pullback is over to then catch the next impulse move. That's how you trade impulse moves and pullbacks. Consolidation, you trade on the breakouts of the consolidation, either to the upside or the downside. So that's a little bit of the basics on how to start analyzing the markets in Forex. Really what you're looking for, the different cycles in the markets. Right now, real quick, let's see if anybody has any questions on that type of basics, and then we'll see if we can go in a little bit more advanced stuff. Any questions at all, make sure to drop them in the chat box. We're going to check out our live on Instagram, see if we have any questions in here. Otherwise, we will be going on to something a little bit more in-depth for you guys. All right, looks like everybody's saying they're pretty keen on it. I will look out and see if anybody has questions on that, and we'll go back into it. So now, the next thing, once you identify support and resistance lines, you really need to see is like identifying where the market is biased, whether it's biased to the upside, the downside, or we're in consolidation. So we can see in this area that our bias is definitely to the downside. Any trades in this area, we're looking to only be selling. So where are we selling though? So we're not selling, again, like I said, on impulse moves. We're selling at the end of a pullback. And how do we know that there's an end of a pullback? Well, when we see that the market is slowing down on this pullback, there's certain candles that you can look for, like this pin bar candle right here. When we zoom into it, you can kind of see what this is showing us is that price is failing to come higher. So then what are we looking for? We're looking for a significant candle to show us that we're breaking to the downside. So we see this movement to the upside. We would be looking on a lower time frame for a break in this short-term trend line to then come to the downside with a strong candle. So we have sort of a short-term uptrend right here. We see a pin bar candle. We see a strong candle pushing to the downside. This would be our entry zone to kind of look to start selling to the next level of support. The next level of support that I can see from this area is at least either here or a little bit longer time frame would be down here. You could see that both of those levels get hit on that next impulse move to the downside. So this would be a profitable trade. This is constantly what we're doing in the markets. It's nothing crazy. I like to keep a very simple strategy to allow people to really understand very, very easily. This is just technical analysis, analyzing the market based on what happened in the past to kind of predict what's happening in the future. If we see that the market is constantly making a push to the downside, a lower high, another push to the downside, a lower high, we're going to be looking here for what? Another push to the downside. And that's how we basically make money off of the markets, by just watching and getting confirmations that that's what's going to happen. We don't just blindly say that here the market is going to crash. We wait for a confirmation, which a confirmation here is these candles right here showing us that the market wants to come lower again. That's all we're doing. It's a very, very simple thing. There's a couple other tools that we use for confirmations like Fibonacci's to kind of measure retracements, but The root of everything is just lining everything up with support and resistance and price action. Price action is just watching where price wants to go. So we can see here that during this area, price wants to make higher highs. So in this area, we're only looking for buys. Now we see in this area more recently what happened. We have this trend line here where we have 2 touches here, another touch here, and then finally a breakthrough right here, and we see a strong push to the downside. We're currently at a very important level of support. So if you guys are not in a trade right now on this, what are we looking for? We're looking for this to break below this level, maybe on the daily or the hour 4 time frame, because we're looking on a very longer time frame. We're looking on the weekly chart right now, and then we're looking for a breakout and then a pullback to give us an entry reason to then take a trade short down to this next significant level. And it's that simple. Like, the technical analysis side of trading is not complicated. It's just following the market, following the structures. That simple. The hard part that people have is being consistent, following a trading plan, following a strategy that works, and acting on it, and consistently taking trades on that. A lot of psychology goes into why people don't make money in the markets, more than them not understanding how to read the markets. Reading the markets and practicing technical analysis is just going to take time and practice with you guys just constantly looking at the markets, watching what it does, seeing how price reacts, and then learning how the market moves. That just takes time. That takes just you watching the markets over and over and over again and kind of seeing how the markets move. I would suggest, if you're a newer trader, to really focus on only 1 or 2 currency pairs, to really hone in on understanding how the market moves on that. If you're constantly looking at 10, 15 different pairs, you're going to get confused. You're going to get lost. It's like trying to go into a new profession and just trying to like learn everything all at once, instead of like learning one section at a time. Learn Euro USD and practice on Euro USD. Take a demo account and start trading on Euro USD, analyzing Euro USD, and see how you do with that pair. Once you feel like you're confident enough on that, maybe go and start looking at another pair and try to see if you can produce the same results that you're using trading Euro USD on another pair. Another thing that some of you guys might want to look into is the different time zones that we're trading in. So the New York session, let me move this so you guys can see. The New York session, a second, let me minimize this. New York session is on Eastern time. We're looking at around 8 a.m. until 5 p.m. During this time, we're going to be looking at USD pairs, Canadian dollar pairs mainly, and that's basically your main pairs that you're looking for. So USD CAD, USD JPY, GBP USD, these types of pairs during the New York session time are going to have more volume. They're going to have more trades being placed. Why? Because the US banks, the Canadian banks are open at that time, and they're the ones that are pushing the markets, driving the markets the most. They have the most capital to allow the markets to move. Next, we have the Tokyo session, which is Tokyo and Sydney session, really. And we're looking at that time around, it really, like Tokyo and Sydney starts around 6, 7, but really you get the movement around 7 to 8 p.m. until around midnight is when you're going to see most of the movement during the Tokyo session and Sydney session. During this time, you're going to be looking to trade JPY pairs mainly, maybe Australian dollar pairs, and those are really the main pairs that I look at. And then London session. So with JPY and AUD, that means USD JPY, GBP JPY, AUD JPY, AUD CAD, AUD USD. Those types of pairs during that time are going to be your best time to be looking at the charts for those pairs. And then London session. So this is, again, Eastern time. London session is going to be from around 3 a.m. until around 5 to 6 a.m. And this time you're going to be wanting to look at like GBP pairs, the Great British Pound, Euro pairs, CHF pairs. These are the pairs you're going to be want to look at. GBP USD, GBP CAD, GBP NZD, the New Zealand dollar. That's the other one. NZD pairs during the Tokyo and Sydney session are going to be some good pairs to be looking at. So depending on what time you're awake, what time you're looking at the charts, what your schedule is, you kind of want to then be able to look at which one of these pairs you might want to start trading. That'll be able to help you better decide. A lot of people say, well, which pair should I trade? Well, when are you mostly looking at the charts? Are you looking, early in the morning before you go to work at around 6 to 8 a.m.? You might want to look at either GBP, USD pairs. If you're trading in late evening, 7, 8, 9, 10 p.m., you might want to look at Japanese yen pairs, Australian dollar pairs, because that's when the markets are going to be moving, and that's when you can kind of read the markets more and see where a majority of the volatility is. Volatility is just movements like this. So let's go to our 1 hour chart. And you can see that at certain times in the day, we have much bigger movements than we do at other times in the day. We see here that at around 3 o'clock here, we have no movement. We just kind of stay in this area. Then we get around 1, 2, 3 a.m., which is during London session, which this is GBP, JPY, that we get big movement to the downside. And then, so all throughout the day, that's what we're looking at. So again, right here, we're going kind of into the end of London session, beginning of New York session, we get a lot of volatility. So watching that and watching certain pairs is going to help you to decide which pairs you should be looking at based on you. Like I said, trading is a very personal thing. My strategy doesn't work for everybody. Why? Because everybody has different psychology, different ways that they look at the market, different time frames that they look at the market. So you really got to decide what type of trader you are, whether you're trying to trade long term and be a swing or a position trader where you're holding trades for days to weeks at a time, or you're a intraday trader where you're only trying to hold a trade, from the beginning of the day till the end of the day and close it in that day. Or you're a short-term scalper and you really just want to get in, look at the charts for 2-3 hours and get into the markets, get out of the markets between an hour at the most, hour, maybe 2 hours, 3 hours, depending on how short-term of a scalper you are, to really just get in and get out. That all depends on you and what you can handle and what type of trader you are. That bases on your whole psychology. If you really want help and guidance on how to decide what kind of trader you are, just shoot me a DM and I can help you guys out a little bit more. But really, that's the most in-depth that I want to go into for Forex basics. There's a lot more technical analysis that goes into this. There's a lot more that I add to my trading plan. So if you guys want to learn more about that, shoot me a DM and I can kind of help you guys out more. Now I just want to go into maybe some questions based on what I just went over, and then we'll go into a market outlook. Yes, you're allowed to record the webinar. I'm also recording it right now, and I'm going to be posting it into our mentorship chat. If you're not in this chat and you want to record it, feel free so that you guys can take notes on this later. No problem. If there's any other questions, drop them in the chat box. I'm going to go into a little bit of a market outlook right now and see what we're looking at for these upcoming weeks and really what we're looking at for the start of January, the start of next year. So let's look at the dollar index first to get started. I like trading US dollar pairs, and we're looking at this on the weekly time frame, and we can see that last week was really the first week that we were able to close at this level and start potentially breaking below this level. We can see that every other week that we came to this significant price level, that it pushed all the way back up before the end of the week. We see here that price actually opens here and closes all the way down here. So this week, if we see price break and close below this level here, where we see a lot of candle wicks, then the dollar can potentially drop all the way down to minimum, I would say this level right here where we have this line, or down to this major level of support right here where we see we have a lot of price action. But both levels are pretty major levels of support that we could see the dollar potentially dropping to. So what does that mean? The dollar index is basically the value of the US dollar. So if we're looking at the dollar index, how does it affect currency pairs? Well, if the dollar is dropping in value, that means that we're looking for pairs that start with USD to be going down. So USD JPY, USD CAD. And this isn't going to be for every single pair. Like we've seen on USD CAD, it's continuing to go up, go up, go up. Why? Because the Canadian dollar is losing value faster than the US dollar. a little bit more advanced that goes into fundamentals and economics, but don't want to go into that right now. But for the most part, pairs that start with USD should be dropping. Pairs that end in USD, so like XAU USD, which is gold versus the US dollar, should be going up. GBP USD should be going up. Again, GBP USD a little different because British pound economy is really dropping right now. That's a little bit more fundamental analysis. Don't want to go into that. But as a like basics understanding like what the dollar index means to you, pairs that end in USD should be going down because the US dollar is losing value, or end in USD should be going up. So if we see X, anything starting out in the beginning, and then USD, those should be going up. Why? Because the US dollar is going down. So this pair, whichever pair this is, whether this is AUD, whether this is XAU, whether this is NZD, USD, those currency pairs should be going up in value. The chart should be going up. And pairs that you see USD first in this position should be going down. So USD JPY and USD, let's see, I really only trade USD JPY, USD CAD, USD CHF. Those are really the main ones. USD CHF, USD JPY, USD CAD. Those are the main USD pairs that start in USD. So that's what we're looking at for the USD pairs, is a potential drop in the market with USD on these next coming months, at least to this zone or this major zone here. So with that being said, let's look at gold and how it correlated to that. You can see that as the dollar has been dropping in value, gold has been going up because the value of the dollar is decreasing. So relatively, gold has been going up. If we look at this on a daily time frame, we see that we've been consistently making higher highs. So to trade this, I'm really looking for a significant pullback or something like this, where we have a few days of consolidation and then a strong candle pushing to the upside. This would be a significant reason for me to enter into the market for a buy if we see something like this again, where you enter into the market looking to go up to the next major level based on previous price. So this target would have been at this level right here. And you see that it was easily hit, and then we had a push above that level, retest, and then it continued to go up. So I would be watching gold on the 4-hour chart, the 1-hour chart, because it's just shooting up very, very rapidly. If you guys are trying to trade gold, then I would be looking 1-hour, 4-hour charts to really look for entries on shorter, smaller pullbacks. Anything like this would be a really significant pullback for us to get back into the market when we see a significant push again to the upside. So anything like this, consolidation and a pullback, this consolidation that we currently see right now, if we see a significant push above 1282, then that would be another good indicator to buy gold at about 1282.1, 1282.3 with small risk, and then buy it up to our next resistance level, which would be up here. I would not be personally taking this trade unless I could really get a tight entry on the 15-minute or 30-minute, because we do have a major resistance level. So for me, I trade on the longer term time frames for the most part. So me seeing that this resistance is coming close, what I'm looking for is for gold to either come up to this level and we get a strong rejection, and that would give me a counter trend trade kind of to sell at this level, or a break above this resistance level and a slight pullback to then get in to buy again. I play a very patient game and very selective with my trades, so that's how I would personally trade this. But personally, gold is going to continue going up for the next coming months as long as the dollar keeps going down. Let's look at GBP JPY. This is another pair that I really love. We already went through it a little bit because we were looking at the weekly chart the whole time that I was teaching you guys. But we're seeing that we're at this significant level right here. We're seeing some rejection right here, but I'm personally, because of economics, because of fundamentals, I'm looking for the GBP JPY to continue going down. What would give us a strong confirmation of this is a break below this level with a candle closing below this level. So what I mean by a candle closing below this level is, let's draw this level right here. So a candle closing below this level would mean something like this candle or this candle, where we see a significant push to the downside. That would give us an indication that price is going to continue going down. We see that we had a pullback after we broke through this level, and then we had another significant candle coming to the downside. So this is depending on what kind of trader you are. Either you want to trade breakouts or retests, where you can either enter here or you can enter over here after the retest and we break lower. But both of these trades would be valid because we have a significant break below this level, retest of this level, and now we broke down again. So we should be looking for the same thing here. Either you're going to take this trade one of two ways. For a short, you would be looking for, where's my tool? Either a significant push to the downside and you enter right on the break as soon as a candle closes down here, or you're looking for a significant break and a pullback, and you get in on the pullback once you start seeing the pullback starting to come down again. Either one of those, that's how I'd be looking to trade GBP JPY. Let's see, another trade, GBP NZD. I love trading this pair. Very, very volatile, so I would watch your risk management. This is it moves in a lot of pips. So if you're not used to that, I wouldn't be very weary of trading this pair. But looking at this, we're at a very significant level of resistance. We could see right here that the last time price came to this level, it dropped, over 1,000 pips actually. In about 2 weeks, we saw about an 800 pip drop. So if we see another rejection at this level, a strong rejection, we already see a double confirmation, which is something that I'm always liking to look for. We see that we have a test of this area and a rejection, another test of this area, and the week opened and we started rejecting. So if we see this continually to reject, this is a nice double top that you guys can trade to the downside. And I would be starting to look for entries once we break kind of this level here, which would also be breaking this trend line that I have drawn. So GBP NZD, still looking at it short now. Last week, or actually 2 weeks ago, we took this trade long on this head and shoulders pattern right here. Once we broke this neckline right here, we took at least 300 pips to this first level. We had a pullback and it ended up reaching all of our targets, which was right here. If you held through, any of you guys who are in our channels and taking our trade ideas, we did have this pullback that knocked out people who took a trade at break even. But if you identified this was a pullback and you saw that next opportunity to enter again, then you were able to get all of our targets and not just our first two targets that were hit for over 300 pips. Right here, we could see that we entered right at this level once we broke above, and we're able to get 180 pips on that move to the upside before we had a pullback. In total, if you guys held this trade all the way through, 300 and actually around 300 pips exactly on that trade. So now we're looking for this to sell as long as price continues to push to the downside. That's really it that I want to go for my market outlook. I'm going to go into more market outlooks and be posting it in our mentorship chat for those of you guys who are in that group. If you guys are not in that group and you really want to get some more training, more insight, shoot me a DM. We're doing a special offer only until January 1st to get started for only $10 on your first month. Get access to all of our webinars that we do, get access to all of the training that we do, all of our charts that we post. Really send me a DM if you guys are serious about this and you like the way that I teach, you like the way that I train. We have a bunch of content coming out. We have free podcasts for any of you guys who just want to get some free content, free podcasts, free Instagram content where we're posting analysis. So there's a bunch of free content for those of you guys out there. How can you buy it? Shoot me a DM and I'll send you the instructions. I don't want to go over it too much during this. Really just wanted to keep this as free content for everybody that wanted to jump on. But shoot me a DM on Instagram, on Telegram, anywhere at Pivot to Profit, and I'll help you out. Now let's go into a Q&A. Literally ask me any questions that you guys want at all. whether it's on stuff that we went through, whether it's on a certain currency pair that you guys like to trade, whether it's on technical analysis, let me know and I will help you guys out. So we're going to open this up. You could either drop it in the chat box or open your mic, whatever works the best. If you guys are on my Instagram live, thank you guys for jumping on. You guys can also ask any questions that you guys want, and I will try to answer them the best as possible. Any questions at all? All right, so if you guys don't have any questions, please just drop a 111 if you guys were able to understand everything that we taught in this session. If it was really helpful for you guys and really informative, just drop a 111 so I make sure that at least you guys are getting a lot of value and you guys are really comprehending this. So I want to make sure that everybody's understanding and is able to, you know, learn from these webinars that we do. Awesome. So I see a lot of ones. What's a good broker? I got a question on our Instagram live. For me, I use LMFX. Some other good brokers I would say is FX Choice is a good broker. If you're not in the US, shoot me a DM and I have some contacts with some really good brokers. If you are in the US, I would really focus maybe LMFX, FX Choice are the two ones that I focus on the most that are really good. Any other questions? So I'm not seeing a lot of questions. So what I really wanted to go over now, Hugo Way. I have not done any research on Hugo Way, but I have heard some good things. I would have to do my research. I'm not going to really just jump out and say that they're amazing and that you should go and join them. But I would do your research on them. I don't know enough about Hugo Way. But for mindset and psychology going into 2019, anybody who's been trading for more than 3-4 months, especially been trading all this year or longer than just a year, what you really need to prepare for 2019 is that the fact that whatever happened in 2018, whether it was bad, whether it was good, forget it. It's in the past. If you did amazing this year, props to you. That's awesome. I'm glad that you had an amazing year trading. Put that in the past. Don't let it get you like that you're going to be super rich in 2019. All you need to do is just continue doing the same thing that you were doing to get the success in 2018. Minimize the mistakes that you made in 2019 and just be consistent. But don't get blown up in your head and say, all right, 2018 was amazing, so 2019 is just going to be ridiculous. Just really realize that the past is in the past, and the work that you put in 2019, you need to continue putting in that same amount of work in 2019. If you had a rough 2018, then you need to take 2018 and throw it out in the trash. The only thing that you're keeping from 2018 is learning from the mistakes that you made. So whatever mistakes you made, you need to go ahead and write down right now before 2019 how you can not make those mistakes again in 2019, whether it was over trading, whether it was over leveraging and using too big lot sizes, whether it was not following a trading plan and not having a set trading plan. Whatever your problem was in 2018, leave it in 2018 and go into 2019 with a new mindset, a new look. Like, start over, be fresh, continually work, continually keep practicing, and realize that this is going to be a fresh start for everybody, whether you had a great year or a bad year. It's a new slate. Everybody just needs to continue to work hard, continue to grind, and continually to try to improve. And whatever mistakes that you've made, everyone makes mistakes. They're not mistakes unless you don't learn from them. So if you guys are making mistakes, if you guys take a lost trade, it's not a loss unless you don't learn from it. If you take that loss and you're like, all right, I did this, this, and this wrong. Now I'm going to take notes on that. And I'm going to make sure that I'm not going to do it again. That's what sets apart people who lose money in the markets from people who make money in the markets. If you continually make the same mistakes over, you're going to get the same bad results. The people who start getting good results made those same mistakes that you made, but then learned from them and improved. So use that to set your 2019 and make it a year that's going to be memorable for the rest of your guys' life. I still don't see any questions, so we're going to end this webinar in just a second. Really, last thing that I just want to say is thank you guys so much for jumping on. Thank you guys on my Instagram live for jumping on. If you guys ever need any advice, ever need any help, feel free to hit my DMs up, and I will help you guys as much as I can. If you guys are interested in joining our course, joining our program, joining the community of traders that we're building, shoot me a DM as well, and I will help you guys get started. If you guys just like our content and want some more free content, check out our Instagram, our Twitter, our podcasts. Everything that you can possibly find is just looking up at Pivot to Profit on every single platform: Facebook, Instagram, Twitter, Telegram. Everything is Pivot to Profit. Just look that up and you'll get a bunch of free content as well for any of you guys who are just looking for free content to kind of help you in 2019. Thank you guys so much for jumping on. Do I have a cheat sheet for candlesticks? No, because I don't study candlesticks and memorize all the different candlesticks patterns. I usually just read candlesticks based on price action. So there's only a couple of candlesticks that I'm really focused on: pin bars, engulfing candles, hammers, and inverted hammers. Besides that, I'm just looking at how price is moving so that it can kind of explain to me what it's going to do in the future. I really don't look at like all the three soldiers and all this and all that. It's just too much for me to memorize. I keep my trading strategy super, super simple. So I don't go that in depth into candlesticks, try to keep it very, very simple. So I don't have a cheat sheet. You can look online and there is a bunch of them though. Just type in candlestick pattern cheat sheet or candlestick patterns and you should find a bunch of information on candlesticks. But any of those cheat sheets, whether it's indicators, whether it's all those different harmonic patterns, candlestick patterns, none of that matters if you don't follow price action as well. So look on your longer term charts, find where the bias in the market is, whether it's up, down, or sideways. And then from there, use that to then guide the rest of your analysis to try to look for the right type of trade. Hope this webinar was very helpful for you guys. Hope you guys were able to learn a lot. I see a lot of people on our Instagram live got a lot of value. Hope you guys all got a lot of value. Have a happy New Year's to everybody. Hope you guys have a safe New Year's as well. And good night, everybody.